Artificial intelligence is transforming industries at lightning speed, and investors are taking notice. But is putting your money into AI startups a smart move or just buying into the hype? In this video, we'll explore whether investing in AI startups is a golden opportunity for the future or a risky bubble waiting to burst. Stay tuned to uncover the real potential behind the AI investment craze. Today we will talk about investing in AI startups, hype or hidden goldmine. So before we start, make sure to hit the like button and subscribe to my channel. 1. The rise of AI startups. Artificial intelligence (AI) startups have exploded in the last decade, drawing attention from both retail and institutional investors worldwide. Companies like OpenAI, Anthropic, and Scale AI have rapidly grown in valuation, backed by venture capitalists betting on AI's transformative power. The rise of large language models, autonomous vehicles, healthcare AI, and finance automation has created a fertile ground for new startups. The buzz intensified after significant breakthroughs in natural language processing, image recognition, and AI-driven decision-making. In particular, AI's growing role in tools we use every day, such as voice assistants, recommendation engines, and automated customer support, demonstrates its broad potential. Startups are aggressively targeting sectors like logistics, cybersecurity, medicine, and content creation. However, this rapid growth has also raised concerns about whether the sector is genuinely solid or merely part of a hype cycle, where valuations might not always align with real-world profitability. 2. The investment boom. The investment boom in AI startups has reached unprecedented levels. Global AI funding crossed $50 billion in 2023, with thousands of new startups launched annually across North America, Europe, and Asia. Venture capital firms like Sequoia Capital, Andreessen Horowitz, and SoftBank are pouring billions into AI-focused companies, often at the pre-revenue stage. Much of this boom is driven by fear of missing out, FOMO, among investors who see AI as the next frontier comparable to the internet boom of the 1990s. Tech giants such as Google, Microsoft, and Amazon are also heavily investing or acquiring promising AI startups to maintain their competitive edge. This feverish climate has led to massive valuations, often before a company has fully proven its business model or product viability. 3. Key growth sectors. AI is not limited to just chatbots or facial recognition. Investors are drawn to startups innovating in critical sectors like healthcare, where AI-driven diagnostics and predictive analytics can revolutionize patient care. AI's role in autonomous driving is another major growth area, with startups racing to perfect self-driving algorithms and fleet management systems. Fintech startups are leveraging AI for fraud detection, customer behavior prediction, and algorithmic trading, offering efficiency gains to financial institutions. Retail and e-commerce benefit from AI-powered recommendation engines and inventory automation. Additionally, cybersecurity AI startups are emerging as essential players, building systems capable of real-time threat detection and adaptive defense mechanisms. Even creative industries such as music design and video production are now being transformed by generative AI tools that produce content at scale. This diversity of applications is a major reason why AI startups continue to attract capital. 4. Risks and challenges. Despite the excitement, investing in AI startups comes with significant risks. Many AI companies lack proven revenue models, and their success often hinges on future regulatory environments, which are still evolving. Ethical concerns over data privacy, job displacement, algorithmic bias, and misuse of AI also pose existential risks to some startups. In some cases, companies overstate the capabilities of their AI solutions to attract funding, leading to possible investor disappointment when products fail to deliver as promised. Additionally, the competitive landscape is fierce. Giants like Google and Microsoft can quickly outpace or absorb smaller competitors through rapid innovation or acquisition. Scalability is another hurdle. AI models require vast amounts of data and computational resources, which can be prohibitively expensive for small startups. 5. Due diligence strategies. Investing in AI startups requires a unique approach to due diligence. Unlike traditional companies, where cash flow and revenue are primary indicators, AI startups often need to be evaluated based on technical assets, intellectual property, and talent quality. Investors should closely examine the founding team's expertise, particularly in machine learning, data science, and sector-specific knowledge. Assessing whether the startup owns proprietary algorithms, training data, or unique datasets can reveal long-term competitive advantages. Additionally, it is critical to verify product-market fit by studying pilot programs, user adoption rates, and customer retention, even in the early stages. Understanding the scalability of the AI models, including their computational demands and potential bottlenecks, is equally important. Checking whether the startup is overly reliant on APIs or large tech platforms can indicate future vulnerability. 6. Real success stories. Some AI startups have grown from modest beginnings into billion-dollar powerhouses, providing a blueprint for potential investment success. OpenAI is a prime example, originally structured as a nonprofit, but later pivoting to a capped profit model after significant commercial potential emerged. Its ChatGPT product quickly became globally recognized, leading to multi-billion-dollar investments from Microsoft. Another success story is UiPath, which specializes in robotic process automation (RPA), and went public with a valuation exceeding $30 billion. Palantir Technologies, while not a traditional AI startup, leveraged data analytics and AI to secure major government and corporate contracts, eventually achieving a successful IPO. In the healthcare sector, Tempus AI has built a robust business applying AI to clinical and molecular data to support precision medicine. 7. The bubble debate. There is an ongoing debate over whether the AI startup surge represents a sustainable investment revolution or an unsustainable financial bubble. Critics argue that some startups receive inflated valuations based on hype rather than tangible performance or profit potential. Comparisons to the dot-com bubble of the late 1990s are increasingly common, where companies with vague business plans still attracted large sums of money, only to collapse later. Some AI startups overpromise capabilities, leading to investor disillusionment when products cannot scale or deliver expected results. Over-reliance on large foundational models provided by companies, like OpenAI or Google, raises questions about genuine innovation versus API repackaging. On the other hand, supporters believe that AI is not a passing trend, but a technological leap equivalent to the introduction of electricity or the internet. 8. Final investment outlook. Investing in AI startups presents both unparalleled opportunities and considerable risks. The potential to be an early investor in transformative companies that redefine industries is highly attractive, particularly as AI integration accelerates across the global economy. However, the investment landscape is crowded with both genuine innovators and speculative ventures riding the AI hype. Prudent investors must approach this space with a balance of excitement and caution, backed by robust technical evaluation and market analysis. Those willing to engage in deep due diligence, involve technical advisors, and focus on startups with clear, scalable applications will be better positioned to succeed. Diversifying across multiple AI sectors, such as healthcare, finance, cybersecurity, and logistics, can also help mitigate concentrated risk. If you like this video and would like to see more like it, please give it the thumbs up. Leave a comment and click the button to subscribe.